Hi, I'm Vidhi Modi, an Australian chartered accountant and principal founder of Pinnacle Advisors, an offshore Australian accountancy practice. On 12th of May, Australian Treasurer Jim Chalmers announced the Australian federal budget for 26-27 financial year, and he called it the most ambitious in decades now. I've broken down this video into 4 different parts as per 4 different lenses because the budget doesn't happen to affect everyone in the same way. This budget is for Australian salaried employees, small business owners, property investors, and non-residents happening to work across the India-Australia space. So let's get into it. If you happen to receive salaries or wages in Australia, then the benefits this year count up to real numbers. The Australian government has introduced 5 rounds of tax cuts affecting roughly 13 million Australian workers. The first one is the Working Australians tax offset. It is a $250 benefit that you end up getting upon lodgement of your tax return. But bear with me, and getting the right terminology here is important because this $250 is not the cash payment that you will get as a refund. This is a non-refundable tax offset that will be adjusted upon calculation of your final taxes from 2027-28 financial year. And let me put it that way, 97% of the Australian workers will get the full $250 benefit upon lodgement of returns. Secondly, the government have introduced a new tax-free threshold, which is 19,985, and in some cases 24,985 if you happen to qualify as per the low income tax offset. 1,000 tax deduction is a real benefit. Whether you are a teacher, a tradie, or any other salaried employee, you can straightway qualify for $1,000 work deduction in your accounts without having to maintain any receipts or bank records. Isn't that a good benefit to have? This basically means that the average tax saving from now onwards would be around $205. The tax rate on income between $18,201 and $45,000 has dropped to 15% from 16% starting from 1st July 2026. Additionally, the rate further reduces to 14% from 1 July 2027. This effectively means that a person ends up saving $268, which further actually increases to $536 from 27-28 financial year onwards. Combined with the 2024 tax cuts that are already in place, an average income earner of say roughly $81,000 will be better off by $2,700 in 27-28 financial year. The intent of the government here is very clear. Motivate the Australian workforce to continue working and at the same time helping them ease up the cost of living pressure that they are experiencing at the moment. For small business owners, the headline this year is certainty. The immediate instant asset write-off of $20,000 is no longer temporary. It is permanent. For any small business with a turnover of less than $50 million can straightway claim a deduction of $20,000 in the year of purchase. This basically means no longer waiting for budgets year after year, as the measure is permanent and no longer temporary. Loss carryback has been reintroduced by the government this year for companies up to a turnover of $1 billion. If a company or a business happens to make a loss in the current year, that can be offsetted against the tax paid over the last 2 income years, creating a refund. This will roughly benefit 85,000 businesses, and most of them happen to be small businesses. For startups in their first 2 years of operations, the loss refundability kicks in from 2028 and 29 financial year. The aim of the government is to help these startups in their initial stage when they have a low appetite for risk and when their profit margins are really thin. This will really definitely add a lot of cash flow in the startups. And do not overlook the fuel excise reduction. The petrol and the diesel excise has roughly reduced from 52.6 almost to 20.6. An additional reduction of 32 cents per litre is an incremental advantage to businesses as it really helps them reducing the operating costs significantly. So, if you're an Australian small business, then one piece of advice for you. Plan your operations over the next 3 years very carefully and take all the benefits that you have at the moment by the government.